alert. On Friday, November 8th, we had Occidental Petroleum, December 20, 42.5 calls trade over 24,000 contracts by end of day. You see it right here. I went ahead and listed a few of the trades that went off on the trigger, which had a 500 minimum. And the one that stood out the most was a trade for 8,258 contracts at 50 cents, which was worth $412,900. And by the end of the day, it was already up 60%. As you see here, the theoretical value or the bid ask on the 42.5 was 80 cents. So this trader by the end of the day had a 240,000 plus profit. I'm curious to see whether whether the majority of these options sold out towards the end of the day, or whether they will go into the open interest. More interesting than this, however, was a risk reversal trade that occurred in the May 15, 2020 40 put, 45 call contracts. This particular trader sold to open 63.69 40 put contracts at 4.55, collected 2.8 million in almost 2.9 million in premium, bought to open 63.69 45 call contracts at 170, premium paid 1.08 million. Net credit to the traders 285 on the position, or 1.8 million in credit. This is a super bullish trade. As you may know, Carl Icahn is involved in Occidental Petroleum. He holds about 22 million shares. He just released an open letter to the board and its CEO calling for some changes. If you read the open letter, you'll see he says every dollar in WTI crude, every additional dollar in WTI crude is another 150 million in free cash flow to the company. So this company is super levered. It's been going down ever since they announced their acquisition of Anadarko Petroleum, and these two trades create a super bullish opportunity in Occidental Petroleum, symbol OXY. Specifically, this risk reversal trade that was put on in the May contracts, 40 puts, 45 calls. Another thing of interest was that the low price for the stock on Friday, November 8th, the stock hit a low of 38.30, and it bounced right off of that automatically because that prior low was reached on October 2008. So you can play this on the long side by buying the stock and just putting a stop right below 38.30, a couple of pennies below that, just to give you some margin of error. Or you can play with the options. Either going long on a December 20, 42.5 calls, or putting on a risk reversal trade on the May 15th if you're willing to own the stock, or maybe even purchasing the 37.5 calls against your 37.5 puts against your 40 puts, limiting that risk, and financing and purchasing the 45 calls. Net debit would be about 40 to 50 cents on that trade. So break even would be above 45.50. Just to look at the charts, this is the daily bar chart. 200 days, you have some divergence occurring in the RSI, MACD, bullish technical indicators. Here's the 5-year weekly bar chart. Again, divergence from oversold conditions in the RSI with the price. Same thing in the MACD. A lot of turnover here. By the way, within the last 5 months, let me go to the monthly. Within the last 5 months, you've had the outstanding shares of Occidental Petroleum turnover. A lot of weak hands shaking. This is the 5-year weekly bar chart, divergence, the low of 2008, and Friday, November 8th, 2019. And the two trades that stood out, the December 42.5 calls that went off at 50. Let's see after the open how much of this stays in the open interest and what price. If you can get a better price, if you could get a 50-cent more or less price, then maybe it's worth the trade. Or else I would play it for the May 15th, 2020 risk reversal. You could even put on a spread, maybe buy the 40, sell the 45s. The options available are dependent on your risk parameters. But we're super bullish and we are long these May risk reversals. HyperFineResearch.com. Follow us.